Good morning, everyone. This is Joey Yap here, and welcome to another episode of Forge in Fire. Now, in today's session, I have a very special guest, one whom I've known for, I think, 20 plus, almost 30 years or so. He's been a school friend of mine. We grew up together, and he's one of those whom I look up to. And my special guest today is a hedge fund manager with a truly unique investment approach, one whom I frequently talk to and bounce off ideas with. Before, that's how I look so smart every time, to go on stage talking about financial matters, because I talk to my friends. And this is one of those whom I have a high regard for. And he's got an excellent time-proven track record in his field. And my friend Yee S has successfully invested in the global stock market for more than 20 plus years through the great bull market of the 20th century, the collapse of the dot-com at the turn of the century, the great commodity bull market, the surge of the Chinese economy, the 2008 financial crisis, and then, of course, the most recently, the coronavirus pandemic, which is one of the main topics why I've invited him today to be part of this very special talk. And also, for those of you who are not aware of, my guests are all special, but this guy is extra special. He has Mr Ong himself has founded his money management company, YS Ong Capital Management. You can search online for him. Of course, it's not easy to get onto his clients list, and it's a privilege for us to be able to have him here today. He's originally was based in San Francisco in 2004, and then he moved his own company to Hong Kong in 2015. And there was a book that he's written. It's called The Strategist Mind, and it's a book that I highly recommend that you read up on. This book is about investing with a high return and low risk mindset, and he has earned a bachelor's degree from the University of California at Berkeley, and of course, CFA accredited from the CFA Institute. Okay, so now, also, in case you don't know, there is for all of us here in Malaysia, he was one of the co-founders of the technology firm, a highly successful technology firm, Glocom, and a sports equipment company called Magicin Inc. Okay, so without further ado, let me invite my friend Yee S up on our show right now. Hey, bro, how are you?
Hi, Joey. Hey, bro. Good. How about yourself? Hey, well, thanks for the very kind introduction and very nice of you. And
I hope it does you justice, because your obviously your accolades and you've done so much, and of course you keep a very low profile people about you. But maybe in your own words, bro, maybe you could just give a brief description to all of my followers and fans who just know you. What do you do?
I actually run a hedge fund, and it's a global strategy. So I look for good undervalued companies globally, and and invest in them for my clients. Right. And I work with institutional investors.
So. Right, and I want to point this out that you actually don't take any more customers unless they're qualified. And this is like and you've been doing, and you see the difference is this on my field. A lot of people, of course, because I come from the seminar field, guys, you are listening to me. A lot of us the fund managers or actually a lot of them they teach, they do courses, but Yee S here don't do courses. He's got nothing to sell you guys, and he's just really he's basically eating his cooking. Okay, so this is something that is very rare in this field, right? And he's an actual doer and a practitioner of the art that he talks about here. So you guys are getting something that is very rare. It's almost, for me, of course, for me, it's not possible to get to Ray Dalio, but this guy is the next best thing for me to Ray Dalio.
You're too kind, bro.
So now I'm going to ask you a few questions, obviously for the beginners who are in this field, right? Do you think right now, is this depression or recession? What do you think?
Well, I think well, recession and depression are pretty much just defined differently in terms of usually people think of a recession as a as economic contraction for the quarter or a few quarters, but the depression is a much longer time.
Right.
So like 3 years, 5 years, or even 10 years. And this is really this coronavirus pandemic is actually affecting everyone globally, right? It's not just at one place, one country. So if you ask me, I would say that this thing will be over, not in a too far future in strong countries such as US and China, because a year from now, I think that they will be back again to their feet, and the economy will be running strong.
Right.
Generally,
human beings are resilient and they're innovative, right? They'll find a way.
Yes, correct, right. And I mean, honestly, this is really not the end of the world, right? When you know they find a cure and they have the vaccine for it, right? Then everything is will be normalized. And right now, I think that there are already 70 vaccines that are being developed in development right now, right? And 2 of them are already in clinical trials. Well, vaccines takes a while because they have to do a lot of testing, and they can only do testing on on the healthy people, right? And this is the tough part, right? You cannot just inject the virus into someone healthy, right? This is not
a good idea to inject someone unhealthy.
Right. So this is the tough part, right? And for the antiviral drug, they are really rapidly being developed right now, and a few companies antiviral drug has already been approved.
So you reckon that the moment the vaccine is created, things could somewhat that will obviously change the perspective of how this economy is going. So it's unlikely to going down to like an extreme case, because everyone probably now, not everyone, but majority of people is now doom and gloom thinking, right? It's like, oh shit, it should, it's going to be terrible. We're going to lose all our money. What do you suggest to these people? Should they just calm down and because some people just panic, right?
Well, yeah, I think that it's normal for people to panic, and that's what average people do when they face situations like this. They'll panic, back to your initial question, to follow this, I mean, U.S. for instance has gone through like 47 recessions in the past, and just one depression. There's the 1929 depression. So big countries, strong countries like that, it should be pretty. It should not take that long to get out of this, right? So it should most likely be a recession. But if in every recession, people always think that that's the end of the world, right? People always think that we have never seen anything like this before. Everything, the sky.
That's what they say every time, right? They say that every single time. It's like, we've never seen this before. It's unprecedented.
Yes. Even the most recent financial crisis, right? It's like, we have not, at that time, we have the banks that they're just folding, closing doors. You have the insurance collapsing, right? I mean, that's the banking system, the financial system is the backbone of our economy, right? At that time, you don't even know a lot of especially the rich people with a lot of cash, right? They don't know where to put their money because all the banks are collapsing, right? But then we still get out of it, right? So I think that it's very important to stay positive at this time. It's not it's really not the end of the world. And people, what people should do actually is to.
I was going to ask you this question. What do you think is the biggest myth about investing in times of crisis right now? Because as from a professional perspective, a lot of us, like the average person is panicking, right? So they probably would do the thing they shouldn't be doing. So what would you advise a beginner like this, or someone who is now, trying to invest, or because they hear, right, it's an opportunity, but they don't know what to do?
Well, right now, the most common thing that will happen is that people will panic sell, right? But what you say is correct. This is the time at times of at extraordinary times like this. This is where you get all the opportunities and the risks, right? So, well, so it's really up to you to find a good companies to invest in. Okay, you can find so right now, if you are a good money manager, this is the time where you can buy a good company at a huge discount, right? If you don't know what you're doing and you're just simply taking risks, this is also a time that you'll buy the company that will collapse.
So, which leads me to one very important question right now, right? This, Warren Buffett is always saying that he doesn't buy airline stocks, and he bought airline stocks, and then now he's selling the airline stocks. What's your take on this?
Well, it's very interesting. I'm surprised that you asked me that question, because usually it is only the analysts or managers that will notice things like that. Activities by the top manager, and he actually tried to do it very subtly when he sell these stocks, of course, right? Because everyone would be following, his action, and he has still other positions in the same stock, because he cannot just sell everything at one time. And so he would not want everyone to panic sell his position so that it goes down, to the toilet, right? And then he would have problem selling it. But I think that I don't think that it's as bearish as it sounds, because most recently he did sell 2 airlines, Southwest and Delta, right? He also sold a bank stock, New York Mellon, okay? But if you look at the details, he just sold some. And he just reduced his ownership from 10.5, 11% to 9.8, 9.7 in all these positions. And it has to do with, I believe that is honestly, I do not know what he is actually wanting to do at the end, but this is actually a strategy that he can use for instance, he can, when you own a company for more than 10%, right? You are subject to certain regulatory supervision. Okay. So whenever that's how we learn about this so quickly, that he sold the airlines and the banks, right? Because after you buy or sell a stock, if you are a major owner of 10% or more, you have to disclose it very quickly to the public. Okay, so people can know what he's doing, right? So and there's also a lot of short selling that you cannot do. Okay, so that's the 10% threshold is a key actually. So he's putting himself below that, so he's not.
So it might be a strategic move just to keep himself, in a place, more flexibility.
Correct, more flexibility, and so that people cannot see what he's doing, right? And secondly, I think he can also be doing something with the government. Okay.
I see.
I mean, in 2008, he partnered up with the government to rescue Goldman Sachs, right? He lent a lot of money to Goldman Sachs. The government, helped behind, guaranteed. And so he looks, so after that, he, with that deal, he made a huge ton of money, right? He's always someone who find opportunities at times of crisis. So if he has a 10% ownership, maybe there's certain things that he's forbidden to do, right? So, so in other words, what his action show is not that he's bearish of these stocks.
I see.
And especially he always hold his stock long term, but rather I think that we should pay attention at this below 10% threshold. He's trying to get himself into, right? And
these are things that the average person doesn't notice. The average person wouldn't notice this, because all they see, he's selling his stuff, and everyone start to panic, and that's the usual for most people, because I don't even know about this 10% threshold.
Yeah, so I think, like I said, that's why I said, that's a really good question, because not many, usually only professionals would look into things like that. And it's interesting that you asked this question. You are very well represented.
It's more interesting that you're able to provide us with this unique perspective, because I think for the average investor, they really wouldn't know, right? They would just look at the reaction of what's happening, and then they react to it. They're not responding to it, which is quite scary.
It's true.
Right?
Yes, and so that's why like average investors usually lose out in the market, right?
Right.
And you know, I mean, for instance, just look at right now, you will see I would say that the biggest mistake that people do is that they buy low and sell high.
Right.
It's interesting because so you're supposed to do that, right? Buy low and sell high, but that's also the biggest mistake that people do, because so if you talk to like average investors, mom and pops, right? No, they are very interested in investing in a company that has dropped significantly in value, right? A company that was worth 1,000 that became 500, 400, 300, 200. They keep on buying those companies, right? And then for companies, you know, certain other companies that they invested $100 and it became like 120, they made 20%. Then they run away, right? They get profit, right? Or even if it's not 20, you know, more than, even if it's not just you know, 20% we're talking about, even if it's like, you know, 50%, 100%, right? No one would ever hold their stocks, you know, that made money, a lot of money for a very long time, right? So essentially what people are doing is that they are limiting their gain, right? And by selling high, right? And they're also taking a huge amount of risk by buying lower and lower and lower, right? This is what people call do not catch the falling knife, right? I just keep on falling. You get hurt and you catch it, right?
Yeah.
So this is problematic, and this is what average investors they do. Okay, so I mean, if you look into history, there are a lot of companies that we have seen in the past. They are just no longer around. Like you know, Broadcom, like Kodak, right? You know, I mean, you don't see, you know, these companies around anymore because they're just simply gone. And some of them, they just kept on losing money. And when people keep on buying their stocks, right, you know, it's just like a black hole. You just keep on losing money, right?
Because they don't know what they're buying. These people don't know what they're buying. They don't do
yes. Actually, it's true. Like you know, when I talk to investors, you know, globally, like they just like, oh, you know, stock 8124, you know, it was selling at 500, now it's only 50, or now it's only 5, right? This is a great time to get in. They have no clue what they're doing. So they keep on buying a company that's going down the drain, right? Now, if you look into some companies that did well, let me give you an example. Your favorite product, Apple. I know you buy every new generation of phone, their computers, everything. Okay, so I mean, year 2000, which is not too long ago, you know. I mean, it's long, but it's not like
20 years ago. Year 2000 is 20 years ago.
Yeah. Time flies. But
we always try to think we're young.
So right now, Apple stock price is what? 280, about that. Yeah. You know what it was worth at 2000? If you would buy at that time, it was just $1.
Right. So cheap.
So you think about it, right?
Yeah.
For an average investor, when your dollar became $1.50, would you sell it? Most likely you would. If not, when it became $2, you would sell it, right? If not, you became $10. You make 10 times the money, right? You would sell it. You would never hold to 280 unless you have some employees with like stocks that are restricted from being from selling, right? People tend to not make the big money, right? People make the little money and they run and they make losses, right? Because they keep buying a company that goes down. And the same with Tesla. When the Model S was rolled out in 2012, I think. You know, I think at that time Tesla was like maybe about $25. That was about 8 years ago. Now what is it? It's like I think $780, $800, about that.
Yeah, huge.
So think about it, right? So I mean, the same thing, right? For people who bought Tesla at $20, you don't think they would sell at, you know, at 200?
The average guy would have done it.
It's gone already at 22. So that's the problem with people, is that they buy, they keep on buying a company that's losing money, and then they cap their gain on the good companies, right? So I mean,
so basically they're just trying to trade for a while, right? They're just trying trading, and trading is not really,
correct.
not they're not really investing. They're just trading.
Yes, you're absolutely right. Most people, they look in the stock market as just as like a gambling ground, right? I'll buy
In and
ABC
out, in and out.
1257, right? It's like a convenient casino, right? So they don't even know what exactly they talk to your the people, right? Your friend. How many people actually know the finances of the company, right? Their future strategies, their management. They actually do not. They just buy
no clue
based on the prices.
Yeah.
Right.
So they're not study the
what
finance.
people should actually do. I'm sorry.
Yeah, they have not looked into the numbers. They don't check the operating cash. They know nothing.
Correct. They have no idea of the business itself, right? So I mean, people need to look at the stock market from a business perspective. Okay, that's what some of the top managers at Warren Buffett they do, right? So I mean, let's take an example. Let's say if you have a gold mining company, okay, just making you a lot of money, right? And then you have, on the other hand, you also have a restaurant business that keeps on losing money, right? So you're gonna sell the gold mining company. You're gonna be buying more and more of the restaurant business, right?
Yeah.
It's just funny you think about it, right? Thinking about it, but
very clear, yes. But people do that's the common mistake that people do make all the time.
Yes, correct, right. So, yeah.
The thing is this, I've been asking, I'm just telling the group here, I've been asking Yi to be teaching a class like this, and he doesn't do that. This is the first time you guys are hearing, from him. He's actually teaching. And this is a form of coaching. It's rare that he's doing this, because, you see a lot of average investors out there, and you see, people talking about this, but rarely, you don't see someone giving you this sort of analysis. So thank you, Yi Xiang, for sharing with us your views on this. Right.
Yeah, and
there's a question here. So what sort of skill set do you think people actually need to acquire, to actually do at least a little bit of what you do?
No.
Because right now a lot of people don't know you can actually do at home. You should learn something.
This is actually an extraordinary time, right? And I think that what people need to do, whether you are a business owner or working for someone, if you want to do well, this a critical skill is that you need to generate new ideas that work at this time, right? Just like, I see, lockdown in Malaysia, MCO, you guys have that too, right? And I see that you are even busier than usual. That you even have more audiences, right? You're having more talks, right? And so I mean, just like in this year, I look at some of your seminars. They're all like 10,000 people, and it's like you have this hardware problem where you cannot find venues that can fit any bigger crowd. So, but now during the lockdown, actually, you have been, being able to share your knowledge and your experiences with more people doing, what you're doing right now, like Forge in the Fire, right? Yeah. So the new ideas, generating new ideas is important. Okay, so you need to know what works at this time, at this time period, and you need to know what worked well. For instance, in online, right?
Yeah, I'm just the thing. So right now the world has changed. Would you pay any attention to companies that would basically survive a pandemic and do well during pandemic right now? For example, Zoom, right? All of a sudden, Zoom just exponentially grown, right? But of course, its growth is so fast, they're probably not able to handle this growth right now. Would you pay any attention to tech companies like this?
Actually, I would actually. I think that right now these are the companies that would do well. Okay.
Right. So right now, the only ones you can turn to right now, like Zoom has overtaken Skype generally.
Right. Pretty much. Yes, correct. And Skype is really just trying to catch up right now, and Cisco too. WebEx, right? So these are the main competitors. So these are the times where you get opportunities with with online companies, right? So companies right now, the ones that serve consumers, that serve people who are locked down at the comfort of their house, right? These are the companies that will do well. Like you said, Zoom, right? Video conferencing, and you have like delivery, right? You have online companies like Amazon, because people are not going out there, buying everything online, right? Even groceries, actually, groceries. It never took off in the US for the longest time, although many grocery stores have been trying to give promotion, try and entice people to get into online groceries, right? People don't do that. And right now, suddenly everyone start doing all of this, right? Just because the environment has changed, right? So this is also what we just talked about, going back to your previous question about that what people need to do at this time, right? They need to have new ideas, right? Even when we do money management, right? We look for the stock, we look for the new ideas that would do well, new companies that would do well at this time period. Like Zoom, that is a great example. This year, Zoom has gone up about 120%, right?
Yeah.
And and this is like many people are very pessimistic and they're very gloomy about the whole thing, right? But for people that works hard and that really think about this and really find opportunities, there's still a lot of money that can be made, right? Even Netflix went up like maybe 50%. I don't have the latest numbers. You have like some gaming online companies that went up too, right? And these are the companies,
right?
And some people actually ask me, are these companies going to once this is over, right? So people are going to stop that. And I don't think so, actually, because
it's a new norm, right? It's a new norm.
Yes, exactly, right. This is exactly like you say, it's the new norm, right? And after people get used to it, right, they will realize, that hey, Zoom is very easy to use, right?
Yeah.
And they'll realize, that
I just ran a 3-day live event for 6 hours a day, just doing my thing. I just created a makeshift stage just through Zoom, and it was fantastic.
Totally right. And so people like you, right? Smart people and people who work hard to think about new opportunities, right? I mean, this is it. Then you'll find new opportunities at time like this, right? Like, let's say for now you were talking about our good friend Alex and Yam, the Global. Global founders, and you should really interview them, actually, because they're really the legend.
If you're watching this, guys, I'm looking for your dates.
No, they're really the legend, and they started from scratch, and now they are the biggest private IT company in Malaysia, and they have hundreds of employees. So they're amazing story. Everyone in the IT industry know them. So actually, Alex just invited me actually yesterday to do like to join their company's like a workout session through Zoom, right? So what happens is that they hire a trainer, right, and then they get all their employees and their top clients to come in and do workout together, right? Team building exercise, right, and client relationship, right? And think about it, right, before this, right, if I were to invite you to do yoga together on Zoom, right? I was like, this guy is sicko, I mean, you can't go to run or bike together. You want to do it on the separately to our own house. You want to do it through Zoom, right? People think you're sick, But now suddenly, it becomes genius, right?
The new norm. I think it's like even after the pandemic, even after this, the whole lockdown is over, people will still mentally they will keep a distance. They probably won't even shake hands and hug someone. So probably most of the conversation will just continue on virtually, just like this.
Yes, it's true. It's true. And think about, right, even for my business, right? So this is how I take advantage of this quarantine too, because I need to visit companies globally, right? And every time I go, for a week, I probably can see like meet with 10 different companies, right? That's already pushing my limits, right?
Yeah.
But now, everyone just wants to do a video conference with me, conference call, right? And then I can do out of comfort of my home office, and I can meet companies in a day.
Yeah.
I can talk to them. I can find the same information, right? But with 10 different companies in a day instead of a week, right? And I save, the companies save
Huge
less
cost.
expenses such as like airfare, hotel, meals, time, right? So it's a huge savings, right? And a lot of people were hesitant to try this technology before because people are always, not many people are like you where you just try everything new. But a lot of people, they actually
to answer that question, I think all of us in this group that we grew up together, right? Our APG group, our group of friends.
Yeah.
We're quite willing to try new things because I think we're probably trained a lot by Cockett, our team leader.
Yes. They actually interviewed him too.
Yeah, we keep doing new shit, and he trained us from young. So
he's one of the most creative guys, that I've ever met. So yeah, I think it'll be fun if you bring him on too.
I think we just bring the whole gang on, because the thing is, our group, our Gen X group, that we grew up with, has a lot of influence on the way we think and the way we behave today. And I probably I don't know if I speak for you, I'm just speaking for myself, that I see the new generation right now. I think it's God's gift to them, this coronavirus pandemic, because right now it's an opportunity. They know, your knowledge right now, or a lot of knowledge of great investors out there, they could probably do a lot for themselves for the next 10 years, right? So the problem is most of them are unwilling to try something different, has been probably a bit more protected than the other generation. So this could be a great setback for them if they don't know what to do during times of crisis. Wouldn't you say so?
Yeah, definitely. I definitely agree with it. You see, many people, they tend to avoid risk, I think that, of course, right, you don't want to just jump off the bridge or something, right? That's pretty dumb. But you need to take calculated risk, right? So all the most successful people like yourself, they take certain kind of risk in life, right? And people become successful by taking good risk, right?
Calculated risk.
Right.
Calculated risk.
If you look at it, right, none of the most successful people here, they become successful by avoiding investing or avoiding starting a certain business or avoiding something, right? That's not how they get rich, right? So just like during the SARS, right, in Hong Kong, right? I mean, the people that avoided the risk, that did not invest in the real estate or those sold out their house, right now they regret it like crazy, right? Because they lost so much money, right? They has gone up so many times, like 10 times, right? So, and the people, like Lee Ga-sing, right? They bought a lot of things at that time, right? So this is actually the time where you can buy good stuffs, good investments, good stock properties at a good price. But like I said, though,
they need the knowledge. They need to do their homework. I tell people this, that they need to do their homework, and they thinking homework is asking 1,000 opinions. So it's not. It's actually you can ask the opinion of sheep and it doesn't matter, right? So you need to. I think for most people, the hard work of doing the research and qualifying the information, talking to the right people and doing their own analysis, that part most people don't want to do, right?
Yeah. People don't want to do the real work, right? And
just give it to me.
Yeah, exactly, right. So I mean, so what people really need to think about Nike, right? Just do it. Right? If you need to expertise, you go look for it. You go read on it, right? You brush up your knowledge, right? I mean, this is the time to do it. And for people, unfortunately, most people are not doers. Unfortunately, they just and some people, they are there are even some people who are professional students. They will just get like 7, 8 PhDs and they just they don't take the next step, right? So taking action is important.
Let me ask you this question. So given all this, how do you envision the world after COVID-19?
Oh, well, this is actually something very interesting. I actually think that after COVID-19, a lot of things will actually, go back to how it was before in some ways, but not exactly the same, right?
Yeah.
Just like we talked about just now, some people who have tried Zoom, they will actually keep using Zoom, right?
I love Zoom right now. I'm a big fan right now.
Right.
So,
Yeah. So yeah, exactly, right.
And I think that they can only improve their technology, because that's the only way they was going to be in the future. Because right now there's going to be a lot of comments. I mean, I've sent in my comment. I immediately got a big account with Zoom, and this is stuff that I need for my events. Of course, I hope they listen. But let's say they do.
Listen to Joey Yap.
But let's say they do, right? From other people, and I'm sure in people in the seminar world would be chipping in and giving them opinions and all that. But if they do listen, the software, the whole platform will only become better. It cannot become worse.
Yeah, exactly. Right. Definitely. Yeah. So that's gonna, so Zoom is definitely gonna be the new norm, and you will see that the behavior of consumers will be highly changed by this coronavirus pandemic, right? So you go back to normal, but it will be a new normal, right? Online groceries, because after they try, they realize that it's so convenient, right? Yeah. So why do I want to, do I want to?
One thing that I like right now is that I'm still able. In fact, the restaurants that were hard to book before are now calling me up, and they say, hey, we got this very special menu. Would you like to try it? I'm like, huh? Those days is so difficult to get, and now and they serve you the best quality stuff, and it is at a fraction of the price, and you can eat. You don't have the ambience and all that, but then you're with family. So I thought this is something that the new norm, and in fact, in the future, I think we could actually just be like this,
Yeah, I mean, this is great, especially for you, because all the restaurants that you want to go to are very hard to reserve, right?
Every time I come to Taiwan, for those that are listening. I forgot to mention, Yi Xiang is based in Taiwan now. He lives in Taiwan, but his company is in Hong Kong. So when I go there, he takes me to all these restaurants that is very regular, book like months in advance. And but the thing is that there's no lockdown in Taiwan, right?
Yeah, actually, it's Taiwan. Is I would say it's actually the safest place in the world now, right? We have like 23 million people, and now today I think it's only like 422 cases. So, and many of these people are really recovered, right? So think about, for the whole country, maybe you have only about 100 people that are infected. It's very, very little. I think Taiwan did a really, really fabulous job, and I think that we are very lucky to be here. Yeah,
exactly. Yeah, that is true. I want to. The only thing I miss is traveling. I can't believe I'm saying that, because I used to be very tired of it.
I know. I see you everywhere. San Francisco, Hong Kong, New York.
This is the longest time I've been home. This is the longest time I've been home, for a whole month. I didn't go anywhere.
Same here, bro.
Good thing we can still do stuff, right?
Right. Yeah.
Right. Now, there's going to be some questions here. I'm going to ask one more, and then I'm going to pass the questions to the crowd here who has a lot. I'm going to post up. But one more, right? This is what should an average investor invest in right now? Are you comfortable in giving some advice, general advice to them?
General investor, like I said, you want to look for opportunities that will do well at this time. Like, companies that have products and services that serve people at the comfort of their home, right? Like, video conferencing. Another thing that I didn't mention is gaming.
Right.
Big thing, I mean, some of the gaming companies are going to make a huge amount of money, after this. Okay, they have actually been making a huge amount of money even before this, right? Like companies like Tencent, right? But now, people think about, right? Yeah, under this pandemic, people still need to eat, play, have fun, right? And everyone is having a bad mood now because they are locked down. which they shouldn't feel like that. But anyway, many of them, they go into gaming, right? They either play bridge with their friends online, they go into, or they play some hardcore games, right? And there are even people that that were not in this gaming before, right? They got sucked into it, right? And these things are very addictive, right? They're like drugs, right? Once you're in it, right? Just like a movie series, right? You can't, you have to get out of it, yeah. So, I mean, these are the companies that will actually do really well.
Right.
Things that, think about right now, right? These companies have the chance to drug the consumers, right? To let them try the drug, right? And once people are drugged, they can never get out.
That's absolutely true. Now we're going to take some questions from the crowd here. I guess this is industry type of question. What sort of industries? It's quite broad, I think, but you want to answer this question?
Sure. I think actually, I think I kind of just did.
Yeah, you just did.
A lot of retail industries would do well, but
the funny thing is, bro, you tell people that, and then they still don't do anything. They don't do the research, because I think a lot of people probably, I hope you guys are not like this, but it's hard to pinpoint exactly which one you're supposed to be buying, because that's your own homework. I guess you guys need to know that. Professionals will not tell you exactly, what company to buy in. You guys need to put in your own homework and do your own research. A guide can be given on what you need to do, but eventually you need to go and do it yourself, right? It's like telling people to go to the, you say, if you want 6 packs, I can't, or he can't go to the gym for you.
Right.
You need to do it yourself.
And this and it's good. That was a broad question, but I think it's a good question, and that many of us many people have actually asked before. Like I said, it's actually better that you look more specifically into what kind of companies, right, that would do well, right? Companies that can actually go into your house to sell your products, right? Instead of companies that rely on you to go to them, like at the mall, on the street, at stores, right? So these are the companies that you should be focusing on. And another thing is, you need to be. I can tell you about companies that you need to avoid, though. You need to avoid companies that are highly leveraged right now. Okay.
Right.
And it's actually, Joey, it's interesting because I was just listening to one of your live broadcasts before, and in general, you told people not to have debt, right? Remember? I don't know if you even remember, because you talk at so many events, right? But
that was before this. That was last year. I did it in November. I said it earlier this year, but.
Okay, so you said you predicted that that the market would not do well, right? And you ask people to keep cash, right? And so this is actually what I would do right now. I would not invest in companies that have high leverage, because you need to sustain over this time period, right? This is a very tough time, right? If you have so much debt, right, you borrow so much money, and then right now suddenly during this coronavirus time, you have no revenue and your expenses is still skyrocket high, and you keep on bleeding money, you're not going to be able to survive this, right?
Precious for these companies, right? I mean, my logic is, if you didn't do well pre-crisis, you're not going to do well post-crisis.
Correct.
Right.
And yes, absolutely right. So that's why companies like WeWork, right? Matsushiro-san, he used to be the richest guy in Japan, right? Now, he runs he's the CEO of SoftBank, and he invested a lot of money into WeWork, billions and billions of dollars. And recently, he promised to buy another 3 billion shares of his company, but he just decided to bail out. He wants to cut his losses.
I wanted to ask you, and I didn't have a chance. I forgot about it. But he's obviously a smart guy. What the hell did he invest in WeWork when he could see that this is obviously that guy is a bit
Well, just like we go back to our previous discussion, is that he's also a risk taker, right?
Right.
And actually, his strategy is actually very risky at this time, because he believes in high leverage. So many of his companies are very levered up. He invested in some huge amounts of money into some hotelings,
Right.
into like WeWork, into like Uber, right?
Oh,
So, and these are, many of these companies are money losing companies, right?
yeah.
And they are just trying to gain market share, right? So what his strategy was is he invests in companies that keep on grabbing market share, right? So, and he thinks that as long as he can sustain the losses and get rid of competitors, right?
Right.
At the end, he'll be the only one left, and he'll make tons of money, right? So
Okay.
there's always his vision, right? Because look, if you invest in a company that's making tons of money, very easy, very soon you'll see another competitor, right? That comes in, right, who wants a piece of the pie, right? But now, if you make it so hard to make money in this field, right? No one would ever come in, right? Why would you want to start a company that's where the biggest players are all losing money, right? How can you survive? You can't, right? But so that's his whole strategy,
That's the
right?
strategy, right?
Yeah. But now, this strategy only works during certain times, right? And this
When
is
times are good. When times are good.
right? Where you can sustain, where you can have the cash flow, right? We have investor, right, come in to keep pumping the cash flow, the money, right? But now this is an extreme time, I mean, WeWork, they do office sharing, right? I mean, many people, they can't even go to work now, right? And they were losing tons of money before. I mean, how are they going to make money right now, right? How are they going to survive, right? So these are the companies that, like I said, I would avoid.
Avoid.
Yeah, avoid that highly leverage.
That's a question from someone here. Can you share your experience on how you tame your temptation of not selling when you have already achieved 200% return, which we may lose out earning the next 2,000%? Well,
okay, so that is a good question, and I think that many people are tempted to sell. To be honest with you, right? But then, after you have, actually, it's because I learned from a lot of my mistakes,
Would you say that we shouldn't put our emotions in the market in the first place?
Correct.
Right? Because if you're truly like what you guys do, you rely on facts rather than rely on guts, right?
Correct. Yeah, we definitely rely on the facts. Right. And we also bought. I personally bought into some companies that that I also saw after doubling, quadrupling it, and then after that I kept on regretting. And then so it was not until after years of experience that you realize that you think about it and say, hey, why do I want to limit my gain, right? So you have a company that went up 20 times, right? So if you lose a little bit out of that, right now it only went up 15 times, right? It's okay, right? Right? Right. So I mean, why would you want to? What if this 20 times becomes 200 times, right?
Right.
So after many years of experiences, then you realize that okay, just let it ride. That's what the top investors like Buffett does too, right? He has been holding his company for like 10, 20, 30 years. So
like Coke, right? Okay,
yeah,
here's from
right.
I think he's asking the big question, which is just as of yesterday, oil prices collapsed into negative currently, no value. What will happen to the global economy? Which businesses shall we focus and invest in during this crisis? Well, it's about the oil question.
Wow. This actually, wow, Henry is definitely in the loop. He's definitely updated with what's going on. And this is, yesterday.
So it's almost like they are paying you to hold their oil.
Yeah, exactly, right. Right now, okay, yesterday, during the mid to late 2000, about 2008, I think the price of oil went to about $147 a barrel, right? So recently it has been collapsing, and yesterday they start to pay you, like you said, right, to pick up a bucket and to get a bucket of oil from them. They will actually pay you for it, and they pay yesterday. The lowest price of oil was negative $40.
Wow!
Can you believe that? They'll pay you $40 if you were to get a bucket of oil from them.
So we just get a bucket and we keep it for them if we get paid.
Okay.
technically we get paid just to keep the oil for them.
Yes, correct, right. So, so I mean, if you think about it, what is going on right now is that the economy is all in a stall, right? And no one is driving, no one is flying, no one is using much power anymore. And then, so we still have so much excess of oil around, right? They have no way to go. Even the refineries, they're not taking new amount of oil to refine because they are all overloaded, And this is also a time. Now we just now your Henry just asked the question about the oil, but if you and oil is a big topic because it just happened. It affects everyone. But if you look into U.S. just about a month ago, a few weeks ago actually, people were dumping milk and eggs, and they were breaking eggs,
right? Okay.
Because the demand of it is gone, right? I mean, why are people people still need to drink milk, eat eggs, but these are the demands from the restaurants, right? The restaurant business is down, right? So then it's sad. You see that all these producers, they're actually just dumping oil, just pouring it out, and then they are breaking the eggs, So this is, like I said, this is an extraordinary time, and oil, there's no doubt, because, who want to use oil now, and there's no storage. The problem right now is there's no storage. Some people, they will still buy. In the past, people would buy the futures, the oil, right? And then they would store them. Let's say you buy oil this month in, let's say, the May one, right? Let's say it's at, at $30, and then in June or July it becomes like $40, right? You can sell, you can make the arbitrage, you can make money there. The only cost that you have is like storage, insurance, right? So now the problem is that there's no way to store.
Right. So storage is the problem for
pumping, right? No way to store, I mean, so when people take delivery of oil in US, they get at Cushing, in Oklahoma, right? And so all the tanks are full, so they don't know what to do with it. So that's why the oils are tanking like crazy. But this is only for May, right? Because futures, they go by each month. So if you look at June, it's back to a more normal price, like $27, and July, August, they go like $30, right?
Especially when travel comes back. Right now, the world they can't travel. It's going to be for some time.
Exactly. Everything is a lockdown, right?
Things change.
And what? So this is the problem, and it's and usually, I mean, if you think about it, right, lower oil price is a good thing because it's a cost savings for the airlines. For the airlines, right? For the airlines, right?
Can use the oil.
Right, exactly, right? They are 50% of their cost comes from the oil. Yeah, very good. Yeah, that. That's the biggest cost of airline, oil, right? So they're not, So all you can see all the KTA, like they have so many planes that park at the Hong Kong airport, but they're not going anywhere, right? So no one is using oil. So that's why that's why we see the collapse right now. So I think that I think that bad days for oil is is still not over. When things everything normalized a year from now, I think it'll be fine.
I think we need a lot of patience to go through this entire pandemic and the whole economic situation. But eventually, I think people need to understand that things are cyclical, right? It doesn't stop here. It's cyclical, right? Things come down and will go up again eventually. So I think with patience over the long run, as long as you believe that there's always, people are going to be innovative, people are going to be constructive, people are going to be productive, right? Because there's always a human factor. Eventually, right, people find a way. That's what I think, right? People find a way.
It's true, actually, and if you look, actually, a lot of the successful people, big businesses, they actually come out, they actually arise from the crisis. I mean, look at Tesla. Tesla was during the oil peak time, right? Then people converted to electric car, right? So you have people that found opportunities at that time, right? And right now, the people are addicted to it. Of course, even when oil prices go down, people will still continue to buy Tesla, right? Even if you look at Facebook, Apple, and all this, right? Many of them, they did really well. I mean, they all come out during the crisis, .com crisis, the financial crisis. Yeah. So definitely, the smart people, the people who work hard, will find this as a huge opportunity.
All right, let's take one more last question here. This is what's the future of companies working in villages with craft and handmade products? Wow. Okay.
Cool. Actually, okay. This is this is going to be. I think that time will be a little bit tough for them.
Yeah, I think there's some companies, right? I mean, just as my opinion. Some companies just need to pivot and do something different right now, and not have the mindset. I mean, in my opinion, not have the mindset to say this is the only product that I want to sell, right? Sometimes for me, it's okay to give up something and switch to something else. You're still an entrepreneur, right?
Yeah.
Don't be too attached to the baby, which is the product.
Yeah. It's true.
Right?
Yeah.
Because if you attach to it, and sometimes the market just simply is right now doesn't support it. So in my opinion, sometimes you just have to change. And if you're the more you're willing to change, the more happier you would be. Because otherwise, you can't force the world to. I mean, at this point in time, it's going to be very hard to sell handmade products.
Yeah.
Just, right?
Yeah, you're right. Because a lot of handmade products are. Many of them are not necessities, right?
Yeah.
And I mean, people will be more buying things that are necessary at a tough time, right? And also, you'll probably be forced to sell at extremely low prices, right?
Yeah.
How are you going to compete with the bigger players, right? So, and this is also a time where I think that we'll see a structural change in our economy. And this is when you ask the question about the world post coronavirus. I think that this is something I forgot to mention, is that you will see a lot of small players, gone, and you see mainly the market will be dominated by the big companies. And so the disparity of income will be bigger, right? So I mean, a lot of these companies, like even coffee shops, restaurants, all these mom and pops, like little boutique shops, right? They cannot survive, right? I mean, how do you pay the rent? Have no income. You have to pay this your employees, right? You have to pay for your products and everything. But the bigger companies, they can survive. They have huge amount of cash, right? And they can they have ways to get finances, right, to get their money.
Right.
So
here's another question. I think this only you can answer this.
Sorry, online game versus
right.
activity versus T.
What's your take?
Well, I definitely think that online game is the way to go. Online games have they have high margin, and they are very addictive, and they can actually reach into the crowd, and it can and people are willing to pay a lot of money for it. Okay, so this is definitely, online gaming is actually one of the one of the industries that I would put my money on. And so just now the earlier question they asked about which industry. Yeah, if you ask if you want me to just say a very general industry, then I would say it's online gaming.
All right. Looks like all the questions are coming in. These guys are all interested. I've seen. Look at this. You got a hot topic today. I watched experts say,
a very smart audience.
I watched an expert say, when everything has crashed after the major depression sets in, we should only be in treasury bonds but what is the worth of treasury bonds of bankrupt governments like the USA? Your opinion is invaluable. Thank you. Okay.
Well, right now, the safest thing you can ever invest in is still the U.S. government treasuries.
Right.
I mean, that's the only thing that has not that you can say that is guaranteed. U.S. has never defaulted before. Okay, so it's still considered safest, right? But now they're paying zero interest, right? So why do you want to invest in it, right? So it doesn't really make sense to invest in it. Okay, and then another thing is when you look into these government bonds, you have to think about what you're holding, right? So you're holding U.S. dollar. Now, do you want to hold U.S. dollar? That's another question, right? Because it's not just the interest, right? It's the currency, right? So if interest is low, but you gain on the currency, then it's fine, right? But if interest is low and you still lose on the currency, then it's not as good, right? But if you ask me about the U.S. dollar, I would actually say that it's still going to be strong. Like I mentioned before, when this is all over, the strong countries will be strong, will be stronger. Just like the bigger companies will be stronger, right? But the smaller countries that are already in financial trouble, and now they have to bail out all these companies, have to have stimulus plans to help the country. They're gonna be in a very tough time. They're gonna experience some very tough time.
Well, he's got a follow-up question. I think he's asked pretty good questions, Andrew, especially when people like Kiyosaki, says it's all fake money. I don't know if you're aware. There's some comment.
Kiyosaki, yeah.
Right. So what's your opinion on fake money? Like, because I think what he meant is because US dollars, they're printing a lot of money, right? They're just, and it's not backed by gold, right? So what's your take on this? Is it fake money?
Well, I don't think that it's really fake. I mean, some people even say that money, is like we shouldn't put too much value in money, but money is the medium of exchange, right? You can use money to buy anything. Well, I mean, yeah, US has been printing, and so has the rest of the world, right? So I mean, it's all relative, right? You're talking about the yen versus US dollar, or the ringgit versus the yen, or the or the renminbi versus euro. Everything is relative, So when they're printing money, and people actually buy their bonds, and people lend them more money, and the economy is strong, then they will still continue to do well, right? While there are other countries, they are also printing money. It's not like they're not printing money, right? And economically, they are more in trouble, right? I mean, at the end of the day, right, you still have to hold something, right? Everything has a risk, right? I agree with him that that there's definitely a risk in holding the US dollar, but so is everything else. So you just have to, just like in any stocks, right? Even Zoom, there's a risk. They say that they have security issues. So, I mean, but the companies still do it.
Right.
Yeah, you have to look. You need to look at the positive and the negative, and you got to think about it. Now, is it still a good investment, right? It's never going to be perfect, right? If something that's really perfect, it's already overvalued. It's probably already too expensive that you don't want to buy anyway. So,
but the opposite of that would be gold. What's your take on gold then?
Gold is actually very tricky because right now gold prices are already very high. I used to be a big buyer of gold. I bought gold when it was just like 300, and then it went to like almost 2,000, 1,900 something. And I saw it when it was like 1,700, but now it's back to and then after they dropped to like 1,100, it came back up. I mean, gold is it's very tricky because it's really based on perception. There's not much usage for gold, right? And at the end of the day, I mean, if you keep gold, you cannot really use it though, right? You cannot, and when you need to spend the money, you need to invest, right? You still need to convert it, right? So and gold usually it does well when interest rate is low. Okay.
Right.
As interest rate keeps going down, gold price should keep going up. So they go in the opposite direction. Correct. So because look, if your bank is paying you 10% interest rate, right? Would you buy gold? No, because every year you get 10%, right? Why buy gold, right? I get free money in the bank, guaranteed, right? Why do this, right? But now when your bank is paying you zero, Then you think about what else can I invest in. Then people think about gold, right? So now interest rate, in the US and many places in the world are almost at zero, right? Which means gold prices is already very high, right? So I don't think that gold will really have much room to go.
Right. Has anyone described you as sexy? This.
No, actually.
Thinking about the whole day, and this is it, right? This is like the pride.
Okay, is that a real question?
You might come from a guy.
So yeah, I guess your audience pool is so wide. You get all kinds of people. So.
All right. I hope our other friends will also come on board and give a talk. As I think a lot of people don't know this side of me, that I have many interesting and really knowledgeable friends, and of course Yee Xiang here is one of them. And you can search YS Ong online, and probably do you still have your book on Amazon?
Yeah. My book is still on Amazon. Yeah, it is. Yeah. So it's called The Strategist Mind. Yeah.
Right. So if you are one of those serious investors, you can then try and find your way to Yee Xiang, and maybe you can talk about where you can go forward. But of course, mind you, this is only for the serious investors, and he doesn't have a class. He doesn't teach courses. This is the first time he is sharing his knowledge with the public. And I'd like to, on behalf of everyone here, thank you, bro. Thank you so much for your time, bro.
Yeah, thanks so much. Really enjoy, being here with you.
Thank you so much. Thank you. Bye now. Thank you.